Rachel Michaelov here from Empire Tax Professionals. I'm the CEO of Empire Tax Professionals. I'm also licensed by the IRS and licensed in 50 states. And today I'm going to be talking about entity selection and what you need to do so you can save thousands of dollars in taxes and how you can be protected by choosing the right entity. So there are several entities. There's a single member LLC, there's a multi-member LLC, there's a C Corp, there's an S Corp, and there are several different types of entities, like I mentioned. Hi, everybody. Thank you for joining. So I want to go over the specific entity. Like I said, there's a sole proprietor also, there's a single member LLC, a multi-member LLC, a C Corp, and an S Corp. Now, a sole proprietor, a lot of people that are coming to me, they're like 1099s. They are issuing paychecks to their specific name, and they're not protected in any way. Sole proprietors are actually the worst, and they're not protected, and they pay the highest amount of taxes. Plus, they are very high risk of getting audited. If you're making like more than $50,000 to $60,000 on an annual basis, I would not recommend for you to be a sole proprietor. I spoke to somebody recently this morning. He called me and he said, "Hey, listen, I'm really new. I'm starting my own business." And, he started working last year since November, made about $20,000. And he had a few questions to see what makes the most sense for him. Should he be a C Corp? Should he be an S Corp? Should he be an LLC? Because everybody's talking about, to be the LLC. And that's like the most common entity out there, but it's not the best entity. And I know a lot of attorneys love the LLC type. It gives you the protection, but it doesn't give you the best tax advantage. And you overpay in taxes if you're a single member LLC. So with this specific client, he made last year about $20,000 and he's a sole proprietor. And I said, okay, so you're a sole proprietor. You're not protected. You're not protected in any way. Now I asked him, how much money are you expecting to make this year? He said, I'm expecting to make about $70,000 to $80,000. And in his situation, it does make sense for him to be incorporated. I asked him specific questions to see if it makes sense for him to be an S Corp, which is one of the most common types of entities out there. If you're a C Corp, normally it's because, and in our community, we have a lot of people that choose to be a C Corp because they don't know how to fill out the S Corp election forms. And if you are a C Corp, you are most likely overpaying in taxes. And I've seen a lot of people in my area, especially local accountants, they choose a C Corp because honestly, the accountants around the area, I don't think they know any better. I've seen so many returns that are incorrectly filed, and the entity is wrong, and that is costing the client at least $10,000 to $15,000 every single year. Yesterday, I had a pizza shop come to me from the local community, and I said, you're a C Corp, you're a fiscal year, and he goes to someone in Queens and I'm like, oh my God, you've been paying 10 to 15. In his situation, it was a little bit more. And he's been overpaying in taxes every single year. And he's been in business for like 18 to 20 years. And he's an established business. And now he needs money because his shop is actually, closing down, or his revenues are really reducing. And we actually helped him get the PPP loan last night. He confirmed with me. But now, if you would have saved $10,000 to $15,000 every single year because you chose the right entity from the very beginning, you would have had so much money right now. You also would have had several investment properties because you've saved so much money and you're doing things the right way. And there's just so many local accountants that are giving really bad advice. So you just got to be really careful of who you go to and who you listen to, because this specific pizza shop overpaid, I would say anywhere between, within 15, 20 years, probably about $150,000 to $200,000 in total. And that's a lot of money. And so I was talking to this client earlier today who said, I told him, okay, it does make sense for you to be an S Corp in your situation. You need to be a U.S. citizen or a green card holder in order for you to qualify to be an S Corp. And there are several other things, and obviously we could go over it with you, and he said, okay, so how does it work? So I said, okay, you get paid $100,000 to the corporation name. As soon as you open the corporation, you need to open it with the state. You need to make sure that you are registered with, you have an EIN number. And if you're selling a specific item, you need to be registered with Department, sales tax. You need to get a certificate of authority depending on what type of business you have. And then he said, okay, so then you open a bank account. You open a bank account, you start depositing money into that account, and you only are allowed to deduct or pay for business expenses throughout that account. So if you have an office space, or if you have, your phone bill, your internet, staples, office supplies, advertising, marketing, Facebook ads, any additional expenses that you are using specifically for business, you are able to deduct it. Now, he used to be on a W-2, and he said that I don't remember how much he was making, but let's say he was making $100,000 on a W-2. You would be taxed 30% or whatever the rate is, depending on, how many children you have, etc. And if you have a mortgage, if you have real estate taxes, but he would be taxed on $100,000 if you're a W-2. Now, if you were a 1099 or if you opened a corporation, the 100K would be deposited, every single week, and it would go to your corporation account. And then you would pay for expenses from the corporation. So like I mentioned, your rent, your office supplies, your utilities for your business, any credit card interest that you have, phone bill, internet, marketing, etc. Now, and any contractors that you pay, whether it's overseas or if you have any employees, your accounting fees would be deducted from there, your bookkeeping fees, any softwares that you need in order for you to utilize for your business. Any coaches, mentors are deductible as well. And I'm just going off the top of my head, but there's so many expenses that you can legally deduct so you can reduce your taxable income. And so in his situation, let's say it was $100,000, and he said he had about $40,000 worth of expenses approximately throughout the entire year. So now instead of him being taxed on $100,000, he's going to be taxed at $60,000. And he's able to deduct his expenses. The 40K of whatever I just mentioned would be deductible. And now he's saving so much money every single year because his entity changed. He's no longer a W-2. He's no longer going to be a sole proprietor. He's going to be a corporation, and you are able to legally deduct those expenses and pay taxes on whatever is left over, not what you're receiving. So on a W-2, the IRS does not care what your expenses are. They don't care if you have office space. They don't care if you have your telephone bill or your car, gas, repairs for your car. They don't care about those expenses because when you're an employee, your employer is responsible for those expenses. But when you own your own business, nobody's really going to be paying those expenses for you. You're responsible for paying for those expenses, and you can legally deduct it as long as it's ordinary and necessary for your business. So the IRS says, in order for you to deduct an expense, it must be ordinary and necessary. So an office space, you need to have that office space in order for you to meet clients, in order for you to do your work or have your phone calls, right? You can't work from home. Then you can deduct that, okay? Then your phone bill, you need that in order for you to call your clients. That would be deductible. And any other things that you need, like I said, your car expense, your gas, your car insurance, all of these expenses will lower your taxable liability. So after you deduct all of those expenses, now let's say you're left with $60,000 or $50,000, and then you have children. So now you're probably, it really depends, but you may get a refund. Depends on, if you have daycare, if you have mortgage interest, if you have real estate taxes, if you have charitable contributions. And you were able to lower your liability from $100,000 to either 60, 50, 40, depending on how much were your expenses for that year. And this is why bookkeeping is so crucial, because you need to add every single expense, so you could deduct it. Chase, let's say, charges you $10 to $15 on a monthly basis for, bank service charges, or there's like a, $20 gas charge here and there. You want to add every single expense so you can legally deduct it. Now, for home office, there are specific rules. For car expenses, there are specific rules. If you become a client, we will let you know what the rules are so you can legally deduct it. You don't want to just deduct anything and, blindly and prepare your own returns. You would need guidance from a specific professional to deduct your expenses legally. But it is possible, and I wanted a lot of people to understand, because there's so many people that are coming to us and they're like, oh, why wouldn't I be on a W-2? Yeah, being on a W-2 is great. But remember, you're going to be taxed at 100K. But when you're on a 1099, you're going to be taxed at 60, 50, and you're going to save thousands of dollars every single year. So let's say now your employer approved for you to be a 1099 or a corporation, and it makes sense that because you need to be, you have to have several clients. You need to have a legit business in order for you to be, on a 1099. There's so many specific rules to make sure that you qualify. But now that you're going to be taxed at $60,000 to $50,000, you want to make sure that you are the proper entity. And there are several different types of entities, like I mentioned: sole proprietor, single member LLC, C Corp, an S Corp, and then a multi-member LLC. So a sole proprietor has, it files its returns on a Schedule C on your individual return. It has a very high risk of getting audited. It, you pay more taxes because you're paying self-employment taxes when you're a sole proprietor, and you're not protected in any way. So if somebody decides to sue you, they're going to go after everything you personally own, which you don't want. When you're a business like a corporate, a pizza shop or an insurance company or a digital agency, marketing agency, or even an e-commerce business, you want to make sure that you're protected. And if anybody decides to sue you, they only go after your corporation. They go after, the corporation that you opened. So you do want to open a corporation. It does make the most sense for you. So now that you have a sole proprietor, we mentioned that's not the best entity. Then we move forward to a single member LLC, because that's like the next one that people choose. Single member LLC, you are protected. You still report your income and expenses on your individual return. And if anybody decides to sue you, they're going to go after that single member LLC. But for tax purposes, it's not the best. You overpay in taxes because you're a single member LLC. And a lot of people don't understand that. They think, oh, I'm an LLC. It should be, I should be protected. They don't understand. They're reading a lot of things online. They're reading a lot of things that, attorneys are telling them. And attorneys don't understand the tax advantages. They only understand the protection. So the next step would be a C Corp, actually. When you open a corporation, by default, you're always a C corporation, always. And when you're a C corporation, it means that you're double taxed. You are protected, but you are double taxed because when you take money out of the corporation, you get taxed on the dividends. And when, it's just double taxed, and it's usually not the best entity. And sometimes it may make sense. You want to speak to a professional. But normally the best entity for, depending on, the type of business and how much money you're making, if you're making $50,000 to $60,000 annually, an S Corp usually makes the most sense for the business. Now, if you are a single member LLC or a C Corp, you need to do a election. It's a tax election in order for you to be approved by the IRS. So you could be an S Corp. There are specific forms that need to be filed, and it must be filed on time. So if, we have a client yesterday that came to us and he was making $150,000 annually, and he's a single member LLC. So he's going to be taxed an additional, 15.3% because he's a single member LLC. And now he has a high risk of getting audited because he went online, opened the entity. He thought that would be the best way. And that's what happens. A lot of people think, they're going to Google a few things, use a software, but a software is not going to help you. A bookkeeping software is not going to help you. Who's behind the scenes? Who's driving the information? You are. And if you don't know much, then you're inputting what you don't know. And that's why it's not, when you go to professionals, you're going to them for guidance. You're not going to them for them to punch a few buttons on a computer and just get the job done. You're going to them and say, okay, this is my entire situation. What can you do to help me? And they view the entire situation and are able to give you specific guidance on how they can help you save the most money in taxes, okay? So he was able to just go online, create a single member LLC on his own and never converted his LLC to an S Corp. Now, it has to be done with the IRS. It has to be done with the state. And, it has to be, you have to get a confirmation from the IRS so they can approve for you to be an S Corp. It's a process. And if you're not an accountant or, a professional, it's always best to delegate this over to professionals to make sure that it's done right 100%. Because if you mess this up, it's going to screw up your taxes. I actually had a client a few years ago who came to me and said, yep, I'm an S Corp 100%. He went to a very big firm in Jersey, and a very big firm. They had like 5-6 partners. And at the time, I was like, oh my God, this guy makes $5 million. It was such a big account. I was so honored, that he came to me. And I said, let's say Mike, his name is, because for confidentiality reasons, I can't mention his name. Say, Mike, are you sure you're an S Corp? Do you have any documentation? He said, no, I don't know where it is. My accountant, because, the bigger the firm, the less of a personal touch you get. And he went to like this big firm, paid so many fees. And at the end of the day, when I e-filed his return as an S Corp, it came back rejected. The IRS rejected it. And I said, are you sure you're an S Corp? He said, yes. I said, the IRS just rejected your tax return because they don't have anything on file. So what happened with this specific situation? We filed a power of attorney because I'm licensed by the IRS. I was able to call on his behalf, call the IRS and say, hey, I'm calling for this specific corporation. Do you have a S election on file? And they said, nope, we don't have one. And we needed to file 3 years for him. So you can't normally go back in the days. It was just very difficult to go back for him to be an S Corp for the prior 3 years. And he would have paid an extra like 20 to 30K approximately if he would have chosen to be a C Corp. And that's one mistake his accountant did. They never confirmed that because once you fax over the S election, it's not considered to be done, right? When we fax over a S election form, the 2553 forms to the IRS, after 45 days, we still have it on our to-do list. We call the IRS and we say, hey, we faxed over the S election for this specific client. Do you have it on file? Nope, sorry, we lost it. We don't see it. Okay, then we fax it over again. We confirm and we have it in our files to make sure that once we receive that S election approval, only then we remove it out of our to-do list. So with that specific client, it was a very difficult case, and it took about a year for us to convert him to an S Corp for 3 years because I had to go to a taxpayer advocate service, and they were able to help me. But his accountant was supposed to fax it over, confirm the IRS got it, then confirm that he got the form, back from the IRS. And that's how you would prove that you are a legal S corporation. Now, when you're an S corporation, you are protected by any lawsuits. If anybody wants to, come and sue you personally or come after your personal assets, you are protected. They won't be able to come after your savings or your personal assets, your car. You're protected. They could only go after what your business has. And I'm not an attorney. I can't give any legal advice, but an attorney would be able to help you and let you know what is the best legal protection for you. I'm a tax accountant, so I could definitely help you with the tax side of things. So when you're an S Corp, you do save money on taxes. You save 15.3% because, the distributions, you don't pay self-employment taxes on the distribution, but you need to be on payroll. You need to there are specific things that you need to do, but normally when you're a single member LLC or a sole proprietor, you overpay in taxes because you're the wrong entity. And there's just, like I said, a major difference in between a sole proprietor, a single member LLC. A multi-member LLC is really the same thing. You do pay self-employment taxes on your net. You are protected. The only difference is that you have another partner. You have 2 members versus 1. A single member LLC could only have 1 member. A multi-member LLC, you have more than 1 member. It's 2 partners. And you do file a separate return. You file a 1065. And there's just obviously different filing requirements. So I want to go over the S election because I'm just talking to so many people. They think, oh, yes, I'm an S Corp. They go online, they fill it out. And when they e-file their returns, it gets rejected. And that's one of the problems that we're seeing consistently, which is why when you're making $10,000 to $15,000 on an annual basis, you want to have an accounting team to help you. And that's what we do. We help clients with entity selection. We help clients with, monthly bookkeeping to make sure they're deducting everything legally possible. Payroll services, sales tax, corporate returns, individual returns, IRS and state notices, calling the IRS, setting up payment plans, filing 1099s, everything from A to Z. We are the entire, tax, bookkeeping, payroll department for business owners. And that's why a lot of businesses come to us, so we can just fill in the void that they need, dump everything over to us. And there's no longer, they don't need to hire a bookkeeper. They don't need to hire a payroll service provider or an accountant at the end of the year. And most of the time, they don't communicate. The three people don't communicate. The bookkeeper doesn't want to talk to the payroll service provider. The payroll service provider won't talk to the accountant. And, once we had a client who got audited, actually, he's a contractor, and he said, the bookkeeper reconciled his books. He went to an accountant, a very top accountant in Manhattan, and they just took the profit and loss report, prepared the tax return, told the client, okay, this is where you need to pay, this is where you need to sign, blah, blah, blah. And they, I think a year or two later, he got a notice from the IRS, and they said, oh, you're getting audited. And he said, I think I did everything right. And when he went to his accountant, I think it was like July or August, she wasn't able to help him. And we were working all year round. We always do. And he came to me and he said, my accountant is unavailable. And I said, okay, let me review your bookkeeping. So I reviewed his bookkeeping, and his bookkeeper reconciled his books until December 18th or like mid-December. And she did not include the income, up until December 31st. And obviously it's not include the expenses because his monthly statement cut off in mid-December. So the IRS was asking for payroll, I believe, lease, and they want to confirm the income. And when you add the income from January 1st up until December 31st, there was a discrepancy because the entire year's worth of numbers were not reported. So I said, let's say again, Mike, your numbers are wrong. The bank deposits had, let's say, $150,000, and on your tax return, it only showed $120,000. Where's the $30,000? I said, give me your books and let me see. We were able to see the books, and it was a mess. So if your bookkeeping is wrong, then your tax return is going to be incorrect. And then you may get audited, which is why I always say bookkeepers don't know tax rules. They don't know that you need to reconcile everything until December 31st. They assume the accountant is going to review it, but CPAs don't review it. Go to your CPA and ask them, did you review my bookkeeping? They're most likely going to say, no, you hired the bookkeeper. You need to do your due diligence and make sure that she does the right job. And if anything goes wrong, you're going to be responsible. You're going to be finding another accountant to help you with this IRS notice, which is exactly what happened here. The accountant never reviewed the books because the client doesn't want to pay anything additional usually. They want to make sure, they rely on the bookkeeper because they're telling them they sound like they know what they're doing. And then they get this IRS notice. So I always say, when you're making at least $15,000 or $10,000 on a monthly basis, you need to have one accounting department that does it all. So you not really have one person to blame per se, but you have one person that's responsible. And when accountants, like when we have our senior accountants, when we prepare returns, we make sure the bookkeeping is in perfect shape. Like every single transaction has to be classified properly because we're preparing the returns and we don't want any problems from the IRS, obviously. So the bookkeeping has to be perfect, and then the returns are just a breeze because we know exactly how to classify things. We make sure everything is reconciled. All the credit cards are reconciled. And I know I'm saying this a lot, but if you don't have such a simple thing, there's a discrepancy, and that's where problems arise. You get notices after notices, then you need to amend the return, then you need to mail it. Then, it takes 6 to 8 weeks or even longer now, 12 to 18 weeks for the IRS to review it. It's energy draining. And nobody wants that. So if you have a bookkeeper that does not understand tax law or is not a licensed by the IRS and they don't know the tax rules, then it may make sense for you to start changing that. Or if you have a payroll service provider that acts like a robot and just processes payroll for you, and you say, oh, my payroll should be, $10,000 for a month. And they're going to say, okay, great, we're going to process that for you. That's not what you need. I had a clown. I recently, it was just years ago, a clown, a clown came to us. He was like an entertainer, a really big entertainer, making $200,000 or $250,000 annually. And I'll never forget how he said, yeah, I have a bookkeeper. Okay, he had a bookkeeper, great. He had a payroll service provider, great. And he wanted me to do his taxes. So I'm looking at his W-2 and I'm like, how much you made $100,000 on your W-2? He goes, yeah, and I said, okay, who processed your payroll? And he said, like, some payroll company. And I'm not like against the payroll company, but I said, did your accountant tell you how much your payroll should be? He said, no, I just wanted, $10,000 a month. And he started later, 2 months later at the year. So he said, I just want the $10,000 a month. That's what I really needed. And I said, okay, you're an S Corp. Did you know that you're able to take funds as on payroll and as a distribution so you could save money? Like he could have paid himself, $60,000 annually, and that would have been taxed at a higher rate. And then $40,000 would be a distribution, and that would be 15.3% less in taxes. And I hit him like with a hammer, like, it looked like it. He's like, what? And I said, yeah, you overpaid in taxes. And he's like, oh my God, I'm so stupid. He thought that the payroll company was doing everything and it was just perfect. But I said, who's telling the payroll company how much your payroll should be? He said, me. And I said, do you have any education, or do you have, not education, but obviously he doesn't know the accounting rules. He just came up with $10,000 from his head. And he's like, oh my God, I desperately need you guys. And then we signed him up on a monthly basis and he's still a client. But you just need, that's what I'm saying. Accountants need to give guidance. And when you have one person that reviews your monthly bookkeeping and you say, okay, this month you made $20,000, your payroll should be $5,000 or $7,000, depending on what it is. And next month you could make only $5K because that's how the business world, it's like up and down. Your payroll should be less. It should not be consistent every single month. Depends, obviously, right? If your income is consistent, then your payroll would be consistent. But how many times are our businesses consistent? You could make 100K one month. You could make 20K another month. I mean, I don't know. It could make 50K the other month. They could really defer. And your payroll should be based on your monthly numbers. It should be based on your experience and a few other things that we go through, not based on what you think it should be. And of course, payroll companies would say, yeah, 10,000 sounds about right. I'll process it and let you know what your taxes are, and they'll file payroll returns for you. That's great. But guidance is what is missing in the business world. And then goes with tax planning. A lot of businesses don't have tax planning. Again, guidance. I spoke to a client who's a real estate agent making 200 to 250K. And he has kids that are 14 and 15 years old, and they're able to, list properties on Craigslist for him. I mean, they're 15 years old. They're able to help him with social media, do other things. And I said, did you ever decide to hire your kids? He said, no, my accountant never told me that. I said, can your kids help you around the business, during the summertime, after hours, Saturday and Sunday? He said, yeah, I'm sure they could. They could, search for things, search for property. I mean, I'm sure if you could train a good 15-year-old, I have a 14-year-old. I know for sure that my son could definitely do it. And I personally hire my kids for my business, and I wouldn't recommend anything to other people if I didn't do it myself. So he came on, is a monthly client now, and we were able to help him put his two kids on his on payroll, and then and help him save money. And then he owns a home. There's another strategy. There's the Augusta loophole where we could rent his home to his business. And obviously you need to have a lease. There's specific strategies that help you lower your taxable liability legally. And there's so many local accountants that are not even discussing this at all. They're not, telling you what you're able to deduct in bookkeeping. They're not telling you what your numbers should be for payroll. And there's so many leaks and in several different departments in one financial accounting department. And that's why I say when you have one department doing it all for you, you could save at least $10,000 to $15,000 with us on an annual basis, especially if we do your bookkeeping and we deduct every single expense legally. We tell you how much your payroll should be, and making sure that you don't overpay in payroll. You don't overpay yourself, and it's classified and it's broken down by W-2 versus distributions. And then, sales tax. We had another client, a graphic designer. He was printing print like flyers or whatever, and he never collected sales tax. Then the sales tax department came after him and he said, you owe whatever, I don't remember the exact amount, but that's a problem. That's an energy draining problem. It's also a monetary problem and a time problem, because now we need to reach out to him and file the sales tax certificate, file all the sales tax returns, make sure he's on a payment plan, and then etc. So he had an accountant for 2 or 3 years. They never told him that he needed sales tax. Why? Because the accountant they didn't do sales tax. They were only focused on individual tax prep and corporate tax prep. This is why, it's so important to have one person, one company that has a huge team. We're like about 20 to 23 people. Every day we hire somebody because we're growing so fast. We're not replacing anybody. We're just growing really fast, thank God. So, you just need to have one company that understands the entire financial picture, and they're able to help you if, sales tax comes up, or if tax planning comes up, or if you want to buy a building. We have a client that wants to buy a building, and we're making, we have these calculations in place where we tell them, does it make sense for him to buy a building? Should the interest be lower? I have somebody on my team that gets on a call and brainstorms with the client and sees, does it make sense, etc. But at least you have that availability, or even, retirement options. We speak to so many people, and I actually spoke to a client. He was 49 or 48 years old, and he never put any money into retirement, and he was a single member LLC, and he was very profitable. He could have put, $20,000 to $30,000 annually, saved money on taxes, and had a lot of money right now saved. And he didn't. He has no savings. He overpaid money on taxes, had a risk of getting audited. The problem is that he overpaid money in taxes, and he has no retirement. And I said, why? And he said, I just didn't know. I mean, you just don't know what you don't know. And there's no guidance. There's just no guidance. So again, we help people with we say, hey, James, let's say if you put $15,000 into your retirement, your taxable liability would lower by X amount. And, and I mean, if you don't need the money, you're able to just stash it and forget about it. And why not? You could put money into retirement. It won't hurt. It really depends, obviously, on the specific situation, how profitable you are. And, it really depends, like I said. But, when you have one financial company helping you with bookkeeping, payroll, sales tax, corporate returns, individual returns, letting you know how much your payroll should be, and guidance on sales tax, and guidance on tax planning. And if you want to hire your kids, we know exactly how to do that. And then at the end of the year, also I forgot to even mention estimated tax payments. That's another, problem. I had a client who was making, I think it was $1.4 million. We spoke to him last year. He's a monthly client now. He said that, Rachel, my accountant told, basically his accountant told him March 12th that he had a $100,000 tax liability that he must pay in 3 days. 3 days, okay? March 15th was the payment was due. And he's like, I loved my CPA. I loved my bookkeeper until I got that tax bill. Nobody wants an unexpected tax bill ever. Nobody. So the purpose of you doing the bookkeeping is for you to review your finances, for you to review your monthly numbers, for you to see your net income, and then pay estimated tax payments based on that. A lot of accountants, what do? They're lazy. They say, okay, your taxable liability last year was $10,000. Just pay $2,500 per quarter and you should be fine. And that's wrong. That's the lazy route. If you have one accounting team that that does your bookkeeping, looks at your numbers, and we make your estimated tax payments every single quarter. So April 15th, you make a small payment. June 15th, you make another payment. September 15th, you make a third quarter payment. And then January 15th, you make the fourth payment based on the actual numbers, not based on last year's numbers. And then what happens? You don't have a unexpected tax bill at the end of the year. You don't. You actually either have like a $500 refund or you owe $500. It really depends because, now we're adding your children, your mortgage interest, your real estate taxes, your charitable contributions, whatever. We add a few, your student loans, your tuition, whatever. There are specific things that may lower your liability. You may get a small refund, but you don't owe $100,000. You don't owe $20K. You're not worried what your tax bill will be. I mean, we're speaking to business owners right now, and they didn't do bookkeeping at all for the entire year of 2020. They just saved money in a separate account, and they don't even know. How do you know if that's the right amount? How do you know if you don't have enough? It's just a lot of anxiety that business owners are going through. And it's always best if you have monthly bookkeeping. You pay the IRS on a quarterly basis. And by the way, if you owe more than $1,000 to the IRS at the end of the year, you owe an estimated tax penalty, and you're not really compliant. When you're a business owner, you're supposed to be paying every 3 months, you're supposed to be paying taxes to the IRS. If you're a business owner, that's required. So there's just so many things that needs to be done in the accounting department. And when you have multiple people in your department, there's a lot of things that are going to be lost. And, I'm telling you, bookkeepers don't understand what you are able to deduct legally. I've seen, Funnel Hacking Live. It's a major marketing conference. I've seen bookkeepers classify that as personal expense, or ClickFunnels. They think it was a gaming app, and that's a software for marketing expenses. You are able to deduct that. We've seen, cash being not deducted because they assume that it's personal, but we ask specific questions to clients and deduct every possible expense legally because we ask them questions. A lot of bookkeepers, they don't. And obviously, I'm not going to say all, but some bookkeepers don't ask additional questions. They just assume things. And I've seen it so many times. We've seen CPAs that don't know how to reconcile PayPal because they're not bookkeepers, they're accountants. They know how to prepare returns. But in order for you to prepare a corporate return, the bookkeeping must be perfect. So they're not going to go into QuickBooks. And then again, there's a discrepancy. It's a lot. And, when you have, again, a lot of people on your team, guess who's suffering? The business owner. The business owner is going to suffer. The business owner is going to overpay, and the business owner is going to speak to multiple people. And when we have a senior manager on our team, they are, it's like a senior manager, and then below them, there's a dedicated accountant. And when you work with us, you have one dedicated accountant that knows bookkeeping, payroll, sales tax, corporate returns, individual returns. And then we have a senior high-level accountant that reviews everything before it goes out to the client. So when you have multiple people on your team, again, you're overpaying in taxes. And I would even estimate at least $10,000 to $15,000 because the entity may be wrong since they don't know the difference between corporations. Bookkeeping, you may probably are not deducting everything that you can legally because they don't know the tax law. Payroll, payroll is not classified correctly, or, you're also like misclassifying your employees as 1099s and they should really be W-2s. Your bookkeepers won't be able to tell you that, accountants would. And now again, you're jumping from, a bookkeeper or payroll. It's just a major, problem. And you don't know until you get that IRS notice. And don't wait until you get that IRS notice. You really want to have your entire accounting department in one department. And I know a lot of people are asking us, like, what are our fees? And we do an extensive review on your bank statement, on your transactions, and our fees are based on your transactions. How many employees do you have? Obviously, the fees would be different if you have 15 employees or 5 employees, or how many sales tax. We work with a lot of e-commerce sellers, and they have sales tax sales tax filings in like 5 states, 10 states, sometimes even 20. It really depends. And the fees go up based on that. But our, average fee, if somebody had like a business of like 15 to 20K, it would be about, $550 per month. And that would include monthly bookkeeping. Every single month you get your reports. We process your payroll for you. So you don't need to pay for a bookkeeping software. You don't need to pay for a payroll software. We process sales tax for you. We file your returns at the end of the year, and we don't charge you anything additional. We file your individual returns. We process your estimated tax payments. We calculate it for you. And, we help you with any IRS notices, with New York State notices, or any 50 states notices from and then 1099s as well. Everything from A to Z. We are just your entire accounting department, and we help you. So, if you are making, enough money, then obviously it does make sense for you to have an entire accounting department. There are a lot of local accountants that don't offer this because they don't have enough business to keep accountants throughout the entire year. They also have a different business model. They want to be, off June, July, August. They want their summers off. We work all year round, and we have a full staff that works 55 hours during tax season, 40 hours during the off season throughout the entire year. And that's about it. Let me know if you have any questions. I'm here to help you. Again, I'm Rachel. I'm licensed by the IRS. I'm licensed in 50 states. And we help business owners with bookkeeping, payroll, and everything. And then we also help businesses with standalone. So if you don't need the bookkeeping service and you're not making that much, then we could help you with filing your corporate returns separately, your individual returns, or even just standalone, like one thing that you need. Or if you got audited by the IRS, we can help you with that regardless of, what state you're in, okay? So that's it. Thank you so much, everybody. Have a beautiful day. Thank you for, watching, and I truly appreciate your support. Bye, guys.